Alrighty, what is going on, Discord family, and welcome to another edition of Market Review with me, T. Hobbs. Today is Thursday, April the 3rd, 2025, year of our Lord. And man, oh man, oh man, the Bears are back. The Bears are back. We're going to break down the S&P 500, the Dow Jones, the NASDAQ, and the volatility index. We're going to discuss some major news coming up on the day tomorrow. And then just discuss some psychology stuff, right? Like some things that, we need to lock in on, right? Whatever you're going through out there, guys, like, trust me when I tell you, a lot of the traders have been doing this for a minute. I'm not one of those people. I've only been doing it for 3 years, but like, there's other people in here that have been doing this shit for a minute. Everything you're going through, if you can just make it through it, I promise you'll be better on the other side of it. So that being said, let's get right into the pre-market plan, man. All right, so on the S&P 500, I had a saucy ass plan, right? Right? And you know what? I traded this motherfucker too, so I'm happy about it, right? I'm gonna rep my shit because everybody was giving me shit in the Discord today when I was trying to go long at the open. Turns out I was right for about 40 plus points, but I only took home 20 because I'm greedy, right? I wanted to go all the way back up. But anyway, my plan on the day was we were in the markdown phase, okay? Because we were in the markdown phase, I said we're bullish as long as we stay above 54.79. You can see we definitely did not do that, right? So we ended up being more bearish. We were bearish as long as we stayed below 55.67, which was previous day low, and there was not one candle that even sniffed this area, okay? Trump rug pull is the reason for this. Like him, love him, hate him, he's the reason why we're down here, okay? After getting nuked at the close, the Bears are in full control, but we have created a nice Tokyo-London range that I want to play in. I want to look to long the lows, and I want to look to short the highs of the range until the range breaks, all right? Meaning you need to identify the range first, okay? So the lows, 55.15 through 54.8125, the high, 55.63 through 55.5275, right? And we were looking to short the highs and long the lows, so I definitely took longs down here, and I'll talk to you about that. I basically took all longs all day, to be honest. I didn't take any shorts. I didn't think about it. No, I didn't take any shorts, which is crazy because, like, you look at the market and you're like, how could you not take shorts? It's simple. It didn't follow my rules, right? If I would have took shorts, I would have been going against all my rules. So I choose to follow my rules. I don't care if the market dumps 124 points. It doesn't matter, right? Because it's not in my rule book, right? And I'm not about to change my rules for 1 or 2 days that the market is going to do. I'd rather just adjust my TPs and my contract size so I can make the same amount of money while sticking to my rules. All right, so what were we looking for? Inside of here, we're looking to long the lows, short the highs, and yeah, that trade worked out. Look for buyers to defend right here, the fair value gap at 54.75 to 54.23. That shit did not work. Like, the market gave a little bit of action. I guess it did. Yeah, it worked. It targeted back up to the bottom of the range, which was exactly what we wanted it to do. So it worked, but you wanted it to go all the way back up. The market just wasn't dealing that. And then my tertiary plan that I talked to you guys about that I didn't write was to look for buyers to defend daily demand at 54.2725 through 53.6650. Now that we're down here, this will be a good opportunity for those traders that trade London, Tokyo, or whatever to potentially look for longs off this level going back up. Finally, we haven't gone back up at all, but going back up so that we can then just dump it on people's head the rest of the day on Friday anyway, or maybe go all the way back up. Who knows? Anyway, that was my pre-market plan. Let's talk about some of the trades I took. I want to discuss some of the market structure. And like I said, we'll get into a lot of the psychological things on the day. So first and foremost, before we go any further, I want to talk about some things that we talked about in the Discord during the charting session on yesterday. Myself, Pippi, Valdez was in there, Yoga was in there, a couple other people was in there, right? But if you guys ever see me post in the chat, like, hey, I'm jumping in for a charting session, you should probably show the fuck up because there's gonna be some gems dropped in there. I'm not saying I'm the person that's dropping them all the time because I'm not, right? But there's gonna be something that you need along your journey, right? Like, I'm not saying it's mandatory or nothing like that, but we out here trying to get better. So whether because of your psychology or your technicals, there's always going to be something in there, right? That you need. Trust me when I tell you that. Last night, the something that was in there that I needed was the warning by Mr. Pippi Banks when he said tomorrow is going to bring a lot of pain. It's going to put a lot of people in pain. And I'm going to explain to you why that meant something to me, right? Once I get through the technical side of it, all right? So technically, what were we doing? Obviously, Trump tanked the fucking market. Like he just did, right? Again, like him, love him, hate him. And then we created what's called a volume imbalance, right? Like literally there's nothing but a gap here, like an in dog, right? New day opening gap. The ES refused to fill it. The other instruments definitely filled it, but the important part was there were buyers down here, right, that pushed the market, but they were unable to bring a new high on the daily time frame. I mean, on the 4-hour time frame, which is, a big dub moment. So if they're unable to bring a new high, that means from this candle top, if we can't bring a new high, right, then the goal is going to be to take out these lows and make a new low. Okay. If that's the case, then you got choices, right? You could say, well, I'm just going to follow the trend. I'm going to get short so I can hold it all day. Or you could be like myself. I have a specific rule. I don't like to get long below midnight. I don't give a shit how displaced we are. If we're below midnight, I don't like to get short below midnight. If we're below midnight, I'm not looking to short the market. It's just not something I'm going to do. I'm not going to change that because it's been working for me, right? So let's go down to lower time frames. Like I said, I'll discuss some of the other things that I'm talking about. So this morning, so we can talk about what I'm trying to discuss here. This morning, the market was at, there was a couple things happening that I feel like I always look at them, but I didn't put emphasis on them, right? First thing, this little box right here, okay? This price right here, 550 macro right here, right? Usually, I like to identify where this is by putting a little rectangle up there, right? The reason why is because this is the lower high. This is the lower high coming off of London open, right? London open is over here somewhere, 250, 330, whatever time they open. The market dropped and put in that lower high in the 350, right? And then came down lower, false bottom, and then, so on and so forth. Here's the part that I missed, okay? If London brought the high of day, right? Then I should not be worried about any structural high breaks that at least don't get back above 550 price. But definitely if they don't get back above the London high, and definitely if they can't get back above the Tokyo high, you feel me? So like today, I looked at this inside of 750, 810, right? And I got long on this side of price, right? So I got long, I got long down here. But I was looking at this as if we broke this high, right? Which we did, and we liquidated the low. So I was looking at this as, okay, we should get a double bottom here, right? I started getting into this position, I think right over here on this side. I got in at like 55.03 or something like that, or 55.05. And then I set through a significant amount of drawdown. I added to the position and got my entry down to about 55.0325, which was basically right here. Finally, the market put me in profit. Now, here's where I fucked up, right? This is where I fucked up. Because if the market made this high and liquidated these lows, and then it comes up here and it doesn't really make a new high above this high, right? Not this one, this one. If the market couldn't make a high above 41 or 45, I needed to get out of my trade on the retest. Like this was my entry to get out, right? Or this was my warning sign to get out, right? Not to mention you go down to the lower time frames. Again, in my defense, I wasn't watching the entire trade. Like I was trying to like ignore it. But once you see this double bottom down here, it's time to get long, okay? Double bottom, triple bottom, whatever. But it's the same thing up here. Once you see this double top up here and then it's followed by liquidation and then a break of the lows, you need to get out at the very latest up here, right? So what I did was I got long, I think like 54.98 or something like that. I can't remember, but I got long down here at these lows and I was up a significant amount. I was in 5 micros, but I was up like $1,400. You can do that math you're on your own, right? The thing that I did poorly is that I didn't give myself $1,000, right? I always tell myself if I'm ever up 1,000, I always move my stop to that 1K mark because I will never be upset making $1,000 a day. I did secure 500. I did end up, working the account close to 1,000 on a day, and then I stopped. But I stopped because giving back all of this profit was going to send me on tilt. Okay, so we double topped up here at the 550 price. I'm gonna draw this out, right, and then I'm gonna draw my next drawing. So once we broke these lows here, okay, I want you to see these lows right here. Once we broke these lows, the only thing you need to do, and something that I didn't do in real time, so I'm reiterating this, is you need to take a Fibonacci, right, with 3 lines on it, 30, 50, and 70. You take that on there, and it's okay whether you want to get long or you want to get short, you need to have these lines. I neglected to do it, but I still caught decent longs, okay? I ended up getting long again inside of 1050. Well, I got long over here. Didn't really work out. I got stopped out, right? And then I got long here at 1050. Nice entry over here, like 54, 58, 59, something like that. No, 54, 54. No, it doesn't matter. It doesn't matter the entry. I rolled this thing up going ahead in here, and then I got long again on this side of price. I got out, and then I got long again on this side of price. Yeah, I was in the Apex account. That's what it was. And then I rallied it up above the high, right? But had I been thinking properly, all I had to do was target these highs right here. Because why? Break below the low, come back and retest 50% of the range or the previous low and the previous high that brought the break of structure, okay? That's what I failed to do. I failed to start drawing out my fibs so that I can stay in line in areas that I want to get short or long, right? Like I have that as a weapon and I'm just not utilizing it, okay? So going into closing the week and going into next week, I'm definitely going to make sure I'm drawing my fibs out in real time because that really helps me with my entry criteria as well as, where I want to trade inside of the macro too. So anyway, we come down, we bleed down again, we break this structural low, right? And again, if you were to just take a fib, right, and run it all the way back up, you can see right at about between 70 and 50, 66% golden pocket. What does the market do? Comes into the golden pocket, put in a low, makes a lower high, and then straight flush, straight down. So what do you anticipate coming into London? If we're gonna go back up or Tokyo, we just broke this low. So you just draw another fib, right? And you say, all right, I want to see what price does when it comes up here, right? So one thing today was a very, very aggressive downtrend. It's rare, but it happens. And the one thing that I was hearing today was a lot of hesitancy because of the volatility. And all I want to do is tell you guys, just as a reminder, ain't no punks out here, right? We ain't scared to trade the market, man. You got to believe it in your heart. You got to believe it in your soul. And more importantly, you got to be unafraid and unapologetic when you take a loss. I'm not telling you be a robot because that's just not possible. You're not a robot, right? What I'm telling you is that you got to get out there and take your shot, right? Because every time you don't take a shot, you're actually fueling your tilt monster. I know that fuels my tilt monster. That's why I trade at my levels and that's it, right? Like if I'm trading at my levels and I'm following my pre-market plan, I got about an 80-20% chance, 80 to 20% chance of being correct. I know that. So I'm taking them trades. And some of them going to be losers. Some of them are going to be winners, depending on how I'm reading the market, right? But for the most part, if I just keep taking them and I'm not missing them, I'm going to put that tilt monster in check, okay? Dow Jones was a freaking monster today as well. Shout out to Malik for killing this shit today. But we had our chessboard. We had our highs, we had our lows, and then we had this 1 hour support. And when we broke this low right here, bright and early, I already knew what time it was. I was like, uh-oh, I got to be a scalper today because I'm not shorting this shit, right? And I'm not saying that nobody else gets shorted. What I'm saying is I like to stay within my rules of discipline, right? So again, you take this is the consolidation, but the previous high is kind of all the way up here, low key, because this is the consolidation. The low that we broke was these lows down here. So you take this low to this high and then boom, right there. Right inside of the golden pocket, we failed, dropped down, come all the way back up to the point of origin, right? Because it's 50% of the previous high and low, or back to the point of origin or the area that brought the low or the high, right? We tapped back into that area, and then it was just a bleed out session. I mean, I haven't even looked at NQ, but I'm certain it probably did the same thing, if I'm being honest. So let's blow this up here. And you can see, yeah, same shit, different, just a different day. The only difference is on NQ, it actually reacted to a demand zone and then rallied, right? And then ended up starting to push through this demand zone. So ultimately, man, the tech sector is still weak, and it's going to continue to be weak because I think we're going much, much lower. So just get used to this volatility. And speaking of volatility, let's take a look at the volatility index, especially on the 15-minute chart, because it's something I want you guys to see. On the 15-minute chart, you can see the 15-minute chart. That's number one. Like, that's when you know we're not in Kansas anymore. If the VIX, in order for you to be able to see the VIX candlesticks on anything lower than like a 30-minute, right? And when I say see them, I mean like without the chop. Anything lower than the 30-minute is because the volatility has to increase, right? In order for you to see the prints on lower time frames, right? I normally watch it on a 1 hour, but now you can see we're starting to get juicy, man. We're starting to get juicy. And if my theory is correct for the weekly, we're trying to target the 30s. We're trying to start testing this weekly supply zone and take us up to the 30s. So don't be surprised. We got NFP tomorrow. Don't be surprised if they kick it up a notch even further to the downside, or that they rally it up a little bit just to get everybody bullish for the weekend, right? Nobody knows where the bottom is, but everybody's going to try to predict it, right? And we ain't even really got started yet from a structural standpoint, because before I go, I just want to show y'all this, right? You know, we're going to look over it this weekend, but, you know, maybe it can help somebody tonight, you know? This is the monthly candle with 3 days in the market of the month, okay? Not saying this can't turn around, because it could, but the monthly candle is targeting August 5th lows, and then potentially April 1st lows, right? So just take that in mind when you go trading tomorrow, okay? Not saying you should short everything, because I'm not either. Like I said, I didn't take any short positions today, none, right? Because I am a trader and I have rules, right? If the market's coming straight down, there's no reason for me to change my rule. I can either not trade it, right? Or adjust to what it's doing in regards to points. Nobody really is getting 40, 50 points on the ES. My black ass should have been out of that trade just off that anyway. But I did catch 20 points plus a little scalpers here and there, but I did what I was supposed to do. And I can hold my hat on that, right? Always look for those positives. That being said, my name is T. Hobbs. This is the Trader Shop. And I'll catch you guys on the next one, man. Peace.